kit. CHSN 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 CYN QSG.
FDX FedEx announced proposals to streamline its workforce in Europe as part of its ongoing measures to reduce costs. The European proposals aim to reduce headcount across FedEx back office and commercial teams by 1,700 to 2,000, subject to local law and consultation procedures. That is Foxtrot Delta X-ray. That's from a filing from the company FedEx. FedEx sees pre-tax cost of severance benefits and legal and professional fees on plan to range from $250 million to $375 million. Expects savings from the plan to be between $125 and $175 million. FIGS Figs naming a new CFO of Foxtrot India Golf Sandy.
THMO.
BFH, Bread Financial, signs long-term agreement to provide dual credit card program for Saks Fifth Avenue. That is Bravo Foxtrot Hotel. SSNC expands fund administration business in India. That's Sandy
MITQ.
Sandy November Charlie, SSNC. TSHA, Taisha Gene Therapies, to present clinical data from both REVEAL Phase 1-2 trials during company-hosted webcast and a 2024 Rett Syndrome scientific meeting. That is Tango Sandy Hotel Alpha, TSHA. ZBH, Think Surgical, enters distribution agreement with Zimmer Biomet. That's Zulu Bravo Hotel. RIOT and BITF provide comments on Bitfarms' adoption of shareholder unfriendly poison pill. That's Romeo India Oscar Tango and Bravo India Tango Foxtrot. INTU Intuit getting a pop here on very light volume. That's Indian November Tango Uniform. INTU Intuit. DNTH, Dianthus Therapeutics, announced FDA clearance to initiate phase 2 trial of DNTH 103 in multifocal motor neuropathy. That's Delta November Tango Hotel, DNTH.
MICS. 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 MICS.
MICS, Singing Machine to acquire Semicab, AI logistics company. That's Michael India Charlie Sandy. Iraq Soil Ministry said it's fully committed to the quota by 203,000 barrels for May.
CYN 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 CYN
VERX, Vertex acquires artificial intelligence tax capabilities from Ryan LLC. That's Victor Echo Romeo X-ray, VERX.
CYN MITQ CYN CYN
RGNX,
CYN CYN
Regenix
CYN
Bio,
CYN
announcing their COO and
CYN
their COO named President and
CYN
CEO, company CEO Ken Mills to step down named Chairman. That is Romeo Golf November X-ray RGNX.
Z Kit 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 Kit
CYN Syngene getting a little pop here. Company highlighting its proprietary computer vision advancements with NVIDIA accelerated computing. That's Charlie Yankee November.
Kit 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 Kit
Benzinga Pro Squawk has disconnected.
kit, mitq, kit, 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 cyn, kit,
PD pager duty share is getting a pop here as Craig Hallam raises it to a buy from a hold price target of $30 from $21. That's Papa Delta. PD. RPTX Foundation Medicine announcing partnership with Repair Therapeutics to provide genomic profiling services. That is Romeo Papa Tango X-ray, RPTX. In GME, GameStop getting a pop here now. Golf Michael Echo, GME, $30.28.
BNZI. KXIN. WHLR. 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 WHLR.
WHLR. Share is spiking here to the highs now. Whiskey Hotel Lima Romeo, $3.29. WHLR.
WHLR 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 WHLR.
Share is spiking now, $3.50 on WHLR. Wheeler REIT.
WHLR WHLR.
PTN Palatine initiates phase 2 clinical study of bremelanotide to treat obesity. That's Papa Tango November. Lindblad expands operations in core Galapagos market with addition of 2 new vessels. That's Lima, India, November Delta. LTRN Lantern with a patent from the Japanese Patent Office for composition of matter covering drug candidate LP 284, that's Lima Tango Romeo November, LTRN.
Woo. NDRA. Z. QSG. Woo. 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 RNA. 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 RNA, THMO, RNA, Z, Z, RNA, 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 AIXI, RNA, AIXI, KULR. KULR. TNXP.
ARM Holdings getting a pop here, $146, up $2.08. Alfa Romeo Michael. AFMD, Alphamid getting a pop to the highs now, $7.39. Alpha Foxtrot Michael Delta. Company reporting their earnings results. That's on very light volume.
KULR. TNXP. KULR.
Tweet from Citron Research. Citron is no longer short GameStop. It says it's not because they believe the company is a turnaround, but with $5 billion in the bank, they have enough runway to appease their cult-like shareholders.
RNA. RNA. NVGS. TNXP. RNA. RNA. SXTP. THMO. RNA.
CBUS. CBUS announcing $13 million registered direct offering. Charlie Bravo Uniform Sandy. CBUS.
SMLR.
FOXA and CMCSA Fox and Freewheel announced expanded partnership to introduce dynamic ad insertion for college football on Fox and proprietary AdDrive integration. That's Foxtrot Oscar X-Ray Alpha. FOXA. SLP Simulations Plus acquires Proficiency. That's Sandy Lima Papa. SLP. VRA Vera Bradley with their results. A loss of 26 cents. The estimate was 0 earnings. That may not compare. Revenue 80.6 million versus the 90.3 million estimate. A loss of 21 cents adjusted for Victor Romeo Alpha VRA. SLRX, Solaris Pharmaceuticals announcing reverse stock split. Sandy Lima Romeo X-Ray to regain compliance with NASDAQ regulations. SLRX.
TPHS.
CODA, Coda Octopus, reporting 13 cents
RNA.
in earnings.
RPHM,
The estimate
TNXP,
was 8 cents. That's a beat.
IRN, JDZG,
AMSC
IRN,
signed $75 million
RNA.
contract with Irving Shipbuilding,
RNA.
Alpha Michael Sandy
RPHM.
Charlie.
RNA, JDZG, RNA, RNA, IRN, RNA, RNA, NCL, JDZG,
SMID, Smith Midland, secures $75 million noise wall contract for Georgia Department of Transportation. That's Sandy Michael India Delta.
FOXO, CMND, TNXP, ZCAR, OPTT, OPTT, FRGT, BTBT,
GME GameStop getting a pop here now, 31.40. Golf Michael Echo, GME.
FRGT, RPHM, FOXO, TPHS, FOXO, TRNR.
Coming up at 8:30, the consumer price index for May plus 0.1% month over month, plus 3.4% year over year is the consensus. The core CPI plus 0.3% month over month, plus 3.5% year over year. That's coming up now in about 19 minutes at 8:30 a.m. Eastern Time. MTEK and LPTH, Maris Tech collaborates with LightPath for AI-ready infrared cameras. That's Michael Tango Echo Kilo and Lima Papa Tango Hotel. Shares of Maris Tech on very light volume popping on that news. That's MTEK and LPTH.
CAUD. BMR. BMR. WLGS. ENSV.
WHLR, another pop here on Wheeler REIT, $3.37. That's Whiskey Hotel Lima Romeo, WHLR.
TRNR.
SNCE, Science 30.
TRNR.
Disregards SNCE.
KULR. KULR. RNA. RNA. RNA.
China's central bank said will improve macro prudential management of real estate finance, promote acceleration of construction of new model for property development. That's from Reuters.
KULR. TRNR.
Coming up in less than 10 minutes now at 8:30 a.m. Eastern Time, the
Agba.
Consumer Price Index for May,
Agba.
month-over-month plus 0.1%, year-over-year plus 3.4%. The core CPI plus 0.3% month-over-month and 3.5% year-over-year are the consensus for the CPI. That's coming up at 8:30 a.m. Eastern Time.
Agba. Agba. Agba.
S&P futures right now up 7.25. The Dow futures up 39. Nasdaq is up 27.25.
Agba.
Crude is up 94 cents at $78.84. Natural gas down 4 cents at $3.09.
Agba.
Gold is up $5.20 at $23.31.80. Bitcoin futures up 475 at 68,210.
Agba, Agba. GLYC, GLYC. GLYC, GLYC. JFBR, TNXP, TNXP. TNXP, TNXP. TNXP.
One minute to the consumer price index, plus 0.1% expected month over month for the CPI, 3.4% year over year. Core CPI plus 0.3% month over month,
TCON.
plus 3.5% year over year.
TCON. NVGS. TNXP. TNXP. TNXP.
Ten seconds.
TDOC.
Core CPI plus 0.2% versus plus 0.3% month over month, 3.4% versus 3.5% year over year. The
UPST.
CPI flat, 0 versus 0.1% expected month over month, 3.3% versus 3.4% year over year. The S&P futures spiking now
CORZ.
on that news.
RDFN. UPST.
54, 23, 25, up about 38 now on the S&P 500,
RDFN.
following
UPST.
that
Nova. Nova. UPST.
lower than
B.
expected CPI numbers.
BNRG. RDFN. SPWR. RDFN. Nova.
S&P futures now up more than 41 at the highs.
CORZ. UPST. UPST. V. CORZ. ENVX. ENVX. IONQ.
BHAT,
AIDG.
Blue Hat and new partner,
SEDG.
planned gold supply chain business, that is
AI.
Bravo Hotel Alpha Tango.
SEDG. SEDG. TDOCM.
STRR, Star Equity Holdings,
CIFR,
announcing a reverse
BNRG,
stock split, 1 for
HIMS,
5,
INRQ.
to take place
BNRG. Nova.
on after the market close
Nova.
on June 14th.
SEDG.
That is Sandy Tango Romeo Romeo.
RDFN. NVGS. ICCM. CIFR. ICCM. RDGN.
ICCM, Ice Cure Medical, announcing
CIFR.
data from its kidney cancer clinical study.
NVGS.
89.5% recurrence-free rate.
CIFR.
That's India, Charlie, Charlie, Michael.
ICCM, GLYC, UPST, Z, IONQ, ENVX, Z, GLYC, UPST, UPST, Nova, AI, ENVX,
WKHS,
UPST,
Workhorse Kingsburg
AI.
commits to purchase 141 units of Workhorse W4CC Class 4 battery electric cab chassis trucks expected to be
IONQ.
delivered in 2024. That's Whiskey
IONQ.
Kilo, Hotel Sandy,
Coco.
WKHS.
HIMS,
S&P futures now up
Z.
about 46,
HIMS,
following the
IONQ,
lower than expected inflation data. That's
IONQ,
just off the highs right now.
Hive, JAGX, UPST, ENVX, UPST, Z, IONQ, DQ, DQ, UPST, FLNC, HUT, JMIA, JMIA, HUT, CIFR, COCO, CLEU, JAGX, CIFR, CIFR, UPST, Z, Nova, SPWR, JAGX, JAGX, Z, ICCM, UPST, JAGX, UPST, Z, JAGX, Z, ICCM, Z,
ROKU, Roku announcing Roku Exchange. Provides marketers with equal access to Roku media.
ICCM.
That's Romeo Oscar Kilo uniform.
Z. UPST. ZG. Z. Z. ZG. Z. NVGS. HIMS. Nova. JMIA. JMIA. HIMS. BTDR. HIMS. JMIA. SPWR. SPWR. Coco. Nova. SPWR. JMIA. BTBT. NVTS. ZG. ESPR. JAGX. 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 JMIA. SPWR. B. SPWR. SPWR. GCTS, MAXN, SMR, SMR, MAXN, 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 BNRG, BTDR, SEDG, RKT, MAXN, RKT, 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 MDIA, CRDL, MDIA, AI, SPWR, Shoals, SPWR, KRC, SPWR. SPWR. Abridged. TNXP. 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 Abridged. Bion. LAC. AMSC. LAC. Abridged. 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 SG. Abridged. TNXP. Abridged. DQ. GOGL. B.
So yeah. So if you guys have
UPST.
um GME
UPST.
and you down like $4 or $5,
UPST.
if you sell cover calls, let's say you paid $34. If you sell cover calls, you get $3.40 a share. I mean, it's basically like buying it at $31. So
B.
it costs you you cut your losses because the IV is so big. You, you know, you make hella money back. So if this week you just played every day and sell cover calls for like 100 shares, it's like $200 to $300 of profit for 100 shares. If you just do it on Monday and then Tuesday, it's crazy. It's because the IV is ridiculous. If you want more money, you go on 21st, but you don't know what will happen. So when I have something crazy, or if I have a lot of stocks and I want to keep collecting basically free money, I do weekly because I don't want to risk it flying to the moon or
DDT.
something. Like if you have hams, I just play it weekly and you do low IV. So basically, you have to make sure you have the IV and delta. Okay, you need to add delta. Without the delta, you're gambling away. So you need to add delta. Delta tells you the percentage of chance it's gonna hit in the money. So once you have delta, so if delta is point 0.1, is only 10% chance it's gonna hit your target um, price that you're selling at. So if you want to keep your shares, you want to be a delta point 0.2 and below. If you don't care about the shares and you just want to collect premium, like I'll do on some stocks, I'll go higher. I'll go even at the money, in the money, and collect high premiums. So if you
Q.
look at GME, it's ridiculous. Those numbers will change the opening. If the stock
AI.
stays on $30, you're looking at
AI.
about the same numbers. So let's say
Eric.
you bought at $30 today. So you go back at $30.
RXRX.
Okay, if you go back to
ERTL.
$30, you get $400. 400, you make $400 on 100 shares today, just by selling premium, and that expires on Friday. So in 2 days, you get $400. Yeah, 1,000 shares, that's $4,000.
GOGL. AI.
Yeah,
CRTL.
can you change the strike in the middle to all? Make it like 20, so you change to
CRTL.
not so big. Yeah, yeah.
SIBG.
Change it to
BTDR.
20. You can type it in 20. Yeah, that one doesn't drive you crazy. Yeah, makes it, yeah. So that way you can see
SEVG.
if
CHRX.
market
AI.
opens at $30, right? You get about $450.
PHWY.
it'll drop because there's a theta decay. Make sure you have a theta decay. You have to add theta to your thing. Hit layout,
CHWY.
customize, and add theta. Yeah, because you want to look at the theta decay.
RT.
The percentage
SEET.
each day it will go down. So your theta is your friend. Theta accelerates super fast the last 2 days. So
AMSC.
by tomorrow, if you sold
BMBL.
400, but tomorrow it price the same,
AMSC.
it's gonna be worth only 200. That means you made $200
Wolf.
right away, and then
ENFB.
you
QSG.
can close the position and sell it for 21
AMSC.
and collect another
AMSC.
$600 on it. So
Wolf.
if you want it to drop, okay, and then you want it to actually go up. So you want to
AMSC.
drop like $2, $3, $4, right? Which GME does. That's why the
XRX.
IV is so huge. So if you look on the right hand
TNXP.
side, look at the
TNXP.
IV,
AMXC.
452%.
TNXP.
If you go all the way to the right, all the way to the right, all the way on
XTIA.
top. Yeah, look at that. That's crazy.
XTIA.
That's
XTIA.
that's that that's why
XTIA.
plain GME, you
GTLD.
make millions of dollars.
XTIA.
I mean, even if you buy
XTIA.
1,000 shares, you'll be
XTIA.
making thousands
XTIA.
dollars a share on just selling premium.
XTIA. XTIA.
Because that's huge money. When it went up from
XTIA.
like 20 to 80, you sold one call. Man, that's like I think it was I have to look at it. It's probably like
AMSC.
$10,000, and it dropped to 40. The next day you can sell it and buy it
XTIA.
back 2,000. You make
AMSC.
$8,000 and repeat the
AMSC.
process.
MLR.
I hope you understand. But yeah, if you're down on GME, self cover calls,
XTIA.
even
SLR.
in a price that you paid off, if you want to maybe keep it, you can sell it at $32, still make about $400. So basically, here's an example. You bought it at 28, you sell it at 32. Okay. Let's say
TCON.
by end of day Friday,
TCON. TCON.
it it's
TCON.
at 32.01. Your profit is
SEH.
$800. If the stock is below $32, you keep your stock and you get $400 free money. So it's a
FIZZ,
win-win
National Beverage,
situation.
announcing a special
The only
dividend of
reason you want to do this,
$3.25.
as long
Bob
as
trading via
this
Zulu
GME
Zulu.
going crazy and the IV is super high, you can collect super big money continuously. If the IV
TNXP,
goes
Tonix
down, yeah,
Pharmaceuticals,
it's
priced
time to
their
get out because
$4 million
when it's
offering,
like
10
this,
November
it's crazy
X-ray
money.
Papa.
If you look at AMC, it's it's on about 200%, but
At
it's not really worth
$1.06
it on AMC. Um, the return is
and a
it's
half
okay,
cents per
but not like
share.
GME, which is ridiculous. So we're hoping it
TDR.
stays at $30, so you can
That's 10 November
probably
X-ray
capture
Papa.
the same premium
CNN Core and Main
on it.
announcing $500 million share
So
buyback.
I mean,
Charlie
even
November
if you're down
Michael.
like uh, $4 on the share, you still make money. It's just selling the premium.
TCON.
SSTK Shutterstock announced
Hope you guys
Shutterstock Image
understand that
AI
part.
powered by Databricks. That's Sandy Tango Kilo.
TCON. BTDR. TCON. 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 BTDR. Ari. TCON. 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 TCON.
PRPO Precipio announcing that it
TCON.
anticipates in the next quarter, Q3,
TCON.
pathology division return to exceeding its break-even point. That's Papa Romeo Papa
TNXP.
Oscar, PRPO.
GOGL. TNXP. XTIA. 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 RDFN. XTIA. 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 XTIA.
XTIA on that patent news, spiking here now 73 cents. X-ray Tango India Alpha.
XTIA. 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 TNXP. Wolf.
Benzinga market update. S&P futures up 47. Dow futures up 335. Nasdaq down. Nasdaq.
TNXP.
S&P futures up 47. Dow futures up 336. Nasdaq up 179. Crude is up $1.26 at $79.18. Natural gas down a penny at $3.11. Gold up $27.80 at $23.54.40. Bitcoin futures up $22.70 now at 70,005.
IREN. 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 BLNK. BMBL. SVM. Hive. DDD. Big. SEDG. SEDG. SEDG.
So on the put side, if you're bullish and you think the stock is gonna go up, right? Then you just sell it like at the money, and then you got collect a premium sale. If Oracle is at whatever, what is it, 133?
SG.
So
SEDG.
if you set 133, you collect $1,100. if it goes below 133, you keep the $1,000 and your shares gets taken away.
Nova.
So that's how it works. So if you own it,
Buy
you can
on.
sell a put, collect the premium, which is whatever that number times 100. See, right now, 133, you're looking at $1,000. You collect $1,000. In 2 days, you collect $1,000. It, it, it works very well if the stock's over
Nova.
$100. You get much better premiums.
Nova.
So some people, if you have like Google, Amazon, any of the Nvidia, um, you could do that. It's yeah, yeah. If the high IV, the premium is extremely high. You usually sell at 30% IV. Once 100, you sell it. You know, people make a mistake. They think stocks go straight up to the moon, and you know that that's not true. When the IV is really high, you want to sell it because the premium sometimes is 3 to 5 times the normal premium. So that's why
WGS.
100% is big money. You got to look at
IRN.
the IV. So if you put like Tesla, you'll see
FLNC.
same thing on Tesla. If you're bullish on it, you just collect free money. Yeah, Tesla is 2, 3 years ago, IV was crazy. I think it was like 200 something percent. So you make some good money on it. Yeah, but Oracle is you see the price from
Pivot.
Oracle and Tesla. You see how the IV so it gives you so much money premium. Yeah, I mean,
PCT.
see the big difference in Tesla. You're getting like 20, like maybe $100. Oracle, you're getting $1,000. Yeah, so you got to look at your shares. If you have 100 shares, right, and the IV is really high, yeah, I mean, you just giving away free money. If you do it the same week,
Any.
yeah,
IRN.
that's free money. Yeah, yeah. If you
IRN.
put like hymns, if you put hymns on, you could do something on hymns. You put hymns on, uh,
ESPR.
and you like, uh, you
ESPR.
sell it by Friday. Do weekly only, so you won't get much because it's the IV is kind of low. It's low priced particular
Short.
item. So how much you'll get? It's going for, let's say you want to start for $24. Okay, you're okay.
WGS.
You want to give it
TVD.
up.
IRN.
That means you probably get $10 for every. It's the IV is low. You won't get that much money unless you're doing it the money, and then you get
IRN.
$30. Yeah. So the IV is not. It's okay. Let me see. IV H45. Yeah. Yeah. If you have GME, yeah, you just keep selling those calls. It's big money. I mean, it's ridiculous. Yeah, it's like owning a $800 share basically sometimes. So let's say GME at opening, uh, it's at $30,
SCR.
and you sell it right away at opening. You collect $400, and if GME goes down to from $30, it goes down to 26, you can close the position because it probably dropped from 400 to $200. You made $200 in like 1 hour. Uh, Cash it out, and then wait, see if it pulls back, and then do it again same day. If it doesn't pull back and it's tanking, then you sell it the next week ahead because the premium's going down, it expires on Friday. You do next week, you'll get more premium. Go on the 21st. That way, you're always collecting premium, which lowers your cost basis. So some people buy more shares as shares go down to lower the cost basis, but actually, you should do it in options to lower your cost basis. So if you do it in time, in 1 2 years, in a $20 stock, probably take 2 3 years average for your cost to go down to $0.
ESPR.
Yeah. Yeah, I helped a couple of guys spend like 5 6 hours. uh, on
MMS Maximus
Mondays,
board approved
I work
increase to
Tuesdays to
existing share buyback program to up to
Fridays.
$200
So only
million of
Mondays
common
I can do
stock.
it.
That is Michael
Live. If when I
Sandy.
sit down live, I can show you how. Yeah, but I'll keep an eye on it. I mean,
ENDX.
to me, if I have GME, I do the beginning market because we don't know if it's going to go up or down. So a lot of times you make the premium is the highest at opening, and it'll just yeah. Wow, still going up. Gee, 6.2.
FITB, Fifth Third
PEGY.
Bank, says on June 11th, entered into new share repurchase deal with Morgan Stanley
And I got to get up.
to
I
purchase
need to
about
get ready for work.
$125
I'm
million
working
of
from
its
home
common
today.
stock. That's factored in the
PEGY.
I
Tango
might pop in
Global.
and out. Okay,
PEGY.
but I have to get ready for work. Okay. No problem. Okay, bye.
IREN. ESPR.
PEGY, Pineapple Energy, secured a $2.5 million project slated to benefit Shinnecock Nation via subsidiary. That's Papa Echo Golf Yankee.
PEGY. BTDR. PEGY. 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 Shoals. SEDG. Nova. STEM. Shoals. SEDG. BLNK.
SYNX.
BLNK.
Silinexcom expands global reach with new Asian and European distribution agreements. That's Sandy Yankee November X-ray, SYNX.
BLNK. FLNC. NRDY. SG. ASM. AA. AA. ASAN. SG. SG. AA. AA. ASM. Nova.
You're not going for the lotto tickets on this one. You're actually making money on it. So this is like smart money, not dumb money. What we do and all these retail do and buying calls out of the money and the stuff we do here, this is like nobody does that.
MREO. Nova.
I mean, even what Bob does, like what Bob does is basically he's playing even the 5 minutes. Normally they don't play it like that. Like smart money will take these, they will just collect premiums, man, on both sides, calls and puts. Because you have to think who's writing all these options is them. So they are collecting the money either way. They are writing the options, collecting the premiums and everything. And they own the stocks, so they don't give a shit. So yeah, that's how you make big money on this one. But yeah. And BMR turned out to be beauty. So basically they wanted to take all of us out here, these suckers. Huh?
CN.
But that was a big candle here, that 560 to 59.
ASAN.
That was the best one here. So
CN.
guys, just open,
CN.
if you're done trading for the day, just open the open paper. I'm gonna open paper trading today
ASAN.
on my iPad or something here. And I'm just gonna try this. I'm gonna actually try to sell the GME. I'm gonna do it naked, I don't care. Alright. Just for the hell of it. But I'm just gonna try it. I'm gonna try it out. See how I make on it. So yeah, just if you wanna try it out, just open the paper trading and try it out. Don't go try this with real money. Try it with, you know what? You can actually like just buy the stock on the paper trade too. So now you have a stock, buy 100 shares of whatever stock you want, and then go sell the options for it and just play it out. See how it plays out. Try it for a month, 2 months, get good at it. You know, try it on the put side, try it on the call side. Yeah, paper trade, do that shit. I used to paper trade all the time. Even when I was trading, I would sometimes be bored. At some point, I requested a demo like the in Trade Zero, you can pay. I don't remember how much was it, like $25 or I don't remember how much is it, and they will give you like a demo account.
BSFC.
I don't remember how much was it. Like I think it's $50, $30, something like that. I don't remember. And they used to give you a demo account, like a real demo account, live trading.
BSFC.
So when I was bored or I was done for the day, I would go try out, just trade on it for the hell of it. Just try my strategies, try something different. Because you're just adding every day to everything you know. You know, maybe you like a new strategy or you've seen a new indicator or something you want to try out.
BSFC.
Then go try it out in paper. Don't try it out with real money. Practice. Practice makes perfect. So yeah, I just updated my TOS here on my iPad. And yeah, I'm gonna freaking do that too. Let's see. I'm gonna sell some GME calls today.
IDEX.
CH, man, CHRS was nasty this morning. Was it? No, it wasn't this one.
SLC.
Which one was the one that popped and dumped pretty quick? Which one was it? CHSN. Yeah, this one was discussed. The CHSN. Yeah, CHSN. This was gross.
XFOR. Edit. XFOR. XFOR. IDEX.
And the market's gonna be crazy today.
THMO. BMBL. NRDY. CN. IDEX, BTDR. CN.
Grester, you're gonna have to do it in you're gonna have to do it in the stock bots. It only works on the specific channel, so do it here, man. You have to do it in this one here. Yeah, it's fine, man, because we didn't want this thing to go crazy here.
CN.
But yeah, it's gonna work here.
CN.
Stock bots. If you want.
NRDY. CN. CHRS. NRDY. CGC.
CGC. Okay, CGC is moving. Interesting.
CN.
I love CGC.
CGC. UPST. UPST. THRX. RXRX. THMO. JMIA. THMO. THMO. CGC. 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 THMO. GTLB. RXRX. GTLB. VGZ, CRBU, AI, AI, TMCI, AI, LGHL, Bank, PAG,
Yeah, 2 minutes change your TIFF. Thank you.
RBRK, RDFN, Proc, FSLY, ASAN, Wolf, Wolf,
Because I forgot to change my scanners.
Wolf, PAGS, Wolf,
Okay, guys, good luck.
PAGS,
Where's
US
this?
markets are now open.
Edit, ALR,
Okay.
RDFN, HIMX,
GME here. AISP. Looks like I'm going to get out of this one.
FSLY,
I get stepped out. Hey, let me put a stop loss here. I'm going to put a stop loss here at 430. I'm going to put this one here just in case.
RYLD,
Yeah, this one I have a stop loss here. GME is taking a dive. Okay, BMR, BMR. Okay, BMR. Let's go, let's go, let's go. Give me 650. What do we got here?
ORCL,
660.
ORCL, ORCL, ORCL,
I get 60.
ORCL, AFRM, AFRM,
GME tanking here. Didn't have a chance to buy the options.
DEA, AFRM, AFRM, CX, AFRM, QS,
Okay, come on. I have a sell at 660 here. Am I gonna get filled? Come on. Oh my god.
CIFR, SDIGM, GTLB, OCL, Wolf, CJLC, LVO, TSLT, GTLI, TPST, DMR, He, Sophie, STIA, AFRM, AFRM, FITB, AJTX, STILR, AFRM, CSRM, TSLG, Goose, STRR, ASGS, STIA, XTIA,
Come on. I don't like this push here.
LYFT, GSAD,
There's
TSM,
a lot of volume here.
HIGR, DUS, HYW, TNC, ARKK, TNRT, RDTS, NVTS, HRHW, ESIS, TDC, RJT, RKTY, ARAY, ATOS, ENPX, TOXPR, RDX, GYST, ARKK, RYT, ESIT, DLNK,
Damn, these guys are going bananas. What the hell? Just calm down there for a second.
RDFH, IOVA, TVH, CRNN, CCRS, PST, ARST, PETS, RUN, ESI, UPST, LCL, LYFT, HYFT, AAPB, FCIL, UPST, LAAC, ATOS, AKBA, AMPX, SNBR, ATAT, ATAT, ESI, LRMT, HPP, FAS, ORCL, KTI, KPTI, HDSUM, DUNS, AGBA, DXD, SNBR, RTAUM, DRRX,
You guys, my USP is done.
ORCL, 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 XTIA, XTIA, NVTS, UPST, UPST, RTST,
One out, 2 to go.
ORCL, RNAST, ORCL, TRCL, JMIA, ORCL, RWHR,
We need to come down here for a second. Then there's a
ORCL, JMIL, XTIA, ORCL, 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 XTIA, DDC, ORCL, TGCL, LYFT, RNA, RNA, TIT, Goodsol, ORCL, Goodsol, JMIA, RNA, RNA, HIW, Goodsol, AFRM, UPST, HIW, DEI, MITK, ORCL, 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 IRN, AFRM, PLL, RTL, OKL, HUD, AFRM, ORCL, BMR, ORCL, IONQ, OTCX, UBXG, BIG, RTO, WGMI, MXCT, PGY, ORCL, DONQ, ORCL, 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 EYEN, ATAT, APA, AREU, AAPB, BDN, APA, ZAP, HIW, ENVX, QS, APA, HPP, STIX, IRN, KOPN, Plug, DDN, APA, HPP, ENVX, APA, HENT, SLDP, LABK, JMIA, DRN, AFRM, WLGS, AFRM, AFRM, VVR, TCON, Wolf, ANVX, DDVH, ENVX, AFRM, ANVX, STRR, PD, BLNK, WGMI, WGMI, IBZ, CHPT, DRN, QS, AFRM, CIFR, AFRM, QS, BRCC, AFRM, IBZ, MREO, 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 ATHLR, Sophie, ORCL, 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 ATAT, AFRM, CHPT, AFRM, AFRM, RQI, ATAX, ERCS, GTX, MPW, ORCL, 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 GTPT, KRET, ECRX, DRRE, ORCL, ORCL, RGFN, IRN, AFRM, OND, ACL, AFRM, RDFN, AFRM, KRE, FSLY, Nova, RTO, SSWR, IDN, RNA, AFRM, SPWR, DRVN, SPWR, CFLT, TCON, BIG, SPWR, AAPU, SSLY, PARA, NTLA, GT, CHPT, JMIA, SWI, SWI, PARA, SYPR, JMIT, MKTW, AFRM, JMIA, SPWR, JMIN, SPWR, FSLY, Cold, APPN, FSLY, Cold, GRYP, CFLT, CFLT, GRYP, JMIA, FSLY, GT, JMIA, SPWR, Nova, 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 JMIA, TNXP, ENVX, 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 NTWR, JMIA, FSLY, AFST, UPST, BNED, JMIA, AAPU, JMIA, AFRM, QS, JMIA, KRE, KTTA, BLNK, JMIA, 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 GRTS, JMIA, JMIHLR, KRE, KREX, ADRM, JMIA, Nofi, JMIA, RIVN, GVGS, RKTS, ELNS, AFRM, UPST, JMIA, AFRM, JMIA, FSLY, RIVN, JMIA, AFRM, RETL, OAK, FSLY, FSLY, AFSLY, MICS, Z, FSLY, CPNG, CPNG, FSLY, RETL, NTLA, AAPU, CPNG, IRPU, CALG, DRCT, AFSLY, CPNG, AAPB, CPNG, HIMX, RETL, ENVX, RIVN, ENVX, RIVN, 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 HIMX, AAPS, AAPU, ENVX, HIMX, RIVN, IRNX, IRNX, AAPU, ULTY, FSLY, FSLY, JMIA, Z, RDFN, Holy, RDFN, RDFN, AAPB, AAPB, ARKK, ARKK, Z, IRN, 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 RTO, TECL, SDIG, PASG, TECL, DRCT, PASG, UAVS, AAPL, Frog, RKT, 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 XTIA, BMR, TECL, AAPL, AAPU, BMR, AAPM, AAPL, 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 AFRM, XTIA, XTIA, TECL, AAPL, AAPL, TECL, AAPL, AAPU, Z, Z, RDFN, RDFN, SNBR, Z, RDFN, ZSLY, AAPL, AAPL, RKLB, SJN, Nova, RDFN, DDC, UBXG, TECL, TECL, AAPL, DRCT, VRNA, HYLN, SNBR, SYPR, VRNA, VRNA, FSLY, UAVS, ENVX, AFRM, ZG, AFRM, AFRM, RKT, RKT, RXRX, ENVX, RKLB, EWM, ENVX, Z, ENVX, KTTA, ENVX, 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 DNUT, DDC, AMRN, BHC, BHC, GWH, VNO, DNUT, VNO, ENVX, RETL, TECL, IDN, DDC, RETL, Nova,
AAPL and
Nova,
MSFT, Apple
LGS,
retakes the
VNO,
top position
VNO,
as most
AGCT,
valuable company in the world over Microsoft.
LGS,
That's Alpha Alpha Papa Lima and
RETS,
Mike Sandy
VNO,
Foxtrot Tango MSFT.
NCZ, SCHI, NVTS, TECL, 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 CANF, Nova, TECL, TECL, CSIQ, ZG, UPST, Nova, SEDG, 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 UPST, 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 UAVS, Nova, 10, TWH, NVTS, GPK, TUDL, Nova, Z, TECL, SEDL, RETL, SEDG, RKLB, NVTS, 10, TSLT, MICS, FUBO, TECL, CSIB, GKK, TECL, ALGM, TNA, AAPL, CGNX, SEDG, AMDL, EJH, Nova, ALGM, ZG, REG, SEDG, EJH, GWH, EJH, RMAX, RMAS, DTDR, 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 AFRM, AFRM, SAVE, ZG, ZG, RMAX, ALGM, AVDL, Z, ZG, ZG, ESI, Z, ARKK, NCZ, ULTY, ARKK, IPW, SNBR, GWH, BMOHU, Karu, DFGR, Z, IMRS, PRVA, CANF, DUOT, NVTS, ARKK, ARKK, RVRK, IPW, IPW, RKLB, IPW, Nova, RDFN, 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 Bion, RDFN, RDFN, Joby, ARHU, RDFN, JKLB, ARHU, GNAK, RDFN, XTIA, PRVA, IONQ, SWIM, Nova, BMR, BMR, AMKR, URTY, EBs, TNA, AMKR, LDI, NVTS, NCZ, NVTS, TCT, Bion, NCZ, AMKR, LDI, AMKR, TECL, LDBH, Frog, AIHS, TRZL, TCON, BRZE, TRZL, AMKR, TNA, GEVO, TECL, RYLD, Sophie, TECL, Bion, Bots, LDI,
President Biden says prices
Time.
are still too
DDC.
high, but Wednesday's report shows welcome progress on
Time.
lowering inflation.
RBRK,
Carrier,
Sophie,
CARR, Carrier developing next generation heat
LSTA.
pump rooftop units through DOE Accelerator.
Dyn, Olo, ZSL, PCT, PCT, AAPU, AAPU, Sophie, Sophie, RDFN, UPST, APST, RDFN, RDFN, Sophie, MNKD, ANFN, Sophie, Sophie, IPW, 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 CANF, RDHG, RDFN, CLPR, Dyn, 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 BZH, UPST, UPST, amps, RDFN, TNXP, UPST, UPST, BZH, Bird, IREN, IREN, BNS, AFRM, AEHL, BNS, RDFN, ENVX, RDFN, BNS, 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 Nova, Nova, BNS, ENVX, Boom, Again, ENVX, DRCT, PWM, Boom, RYLD, UPST, WHLR, Course, Bird, Prague, MICS, SWI, 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 Love, SWI, SWI, Nouveau, Prague, Prague, XTIA, 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 SWI, SMLR, Love, SWI,
DMLR,
XTIA, 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 CLPR, DIN, DRCT, PROC, ADFN, ADFN, CMP, LSTA, AAPU, CG, No, Love, AAPB, RDFN, AFRM, 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 AAPU, UPST, AAPU, RDFN,
Southwest CEO
BNET,
Jordan says he does
UPST,
not expect the
UPST,
Boeing Max
IHT,
7 to enter
XTIA,
airlines fleet until 2026.
AAPU, CG,
Southwest CEO
Kind,
says he will not
Kind.
resign after a call from investor Elliott.
AKYA, AAPU,
Lima Uniform Victor and Bravo
XTIA,
Alpha.
CG, SMLR, CANF, ZG, RDFN, CG, AAPU, AAPU, VYX, AEI, AAPU, TCON, VEN, AAPU, 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 DRCT, AAPU, AAPU, DDC, ENFN, WHLR, AAPU, UPST, ENFN, VEN, VEN, SRDX, AAPU, ENFN, BMR, AAPU, CG, CG, STAA, AAPU, AMRU, AAPU, AIXI, CMRX, AAPB, AAPU, SRDX, DRCT, SRDX, SRDX, AAPU, IREN, AAPU, AAPU, SMLR, AAPU, AAPB, 6, TNXP, AEI, PROC, PMCB, IRBT, PROC, IRBT, IRBT, again, EDTK, SMLR, MKFG, SMLR, MICS, LGCB, Nova, BNED, BNED, IHT, Light, RNA, Light, BNED, BNED, RNA, RNA, RNA. AAPL, AAPL. Light. AAPL, AAPL, AAPL. AAPB. SMLR. AAPL, BNED, AAPB. BNED, MKFG, AAPB. AAPL, 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 AAPU. SMLR. SMLR. AKYA. BNED, BNED. BNED, RBRK. BRFH. SMLR. RBRK, WLGS. AAPL, SMLR. BNED. SMLR, AAPL, MKFG. SMLR, TCON, MKFG, AAPU, SMLR. AAPL, AAPL, AAPU, AAPL, AAPL, MKFG. AAPB. SDIG, Z, Z, DDC.
AAPL Apple shares continuing
MRE,
higher here
Z,
after the
AKYA,
market open, up 3.7%. Again,
Z,
taking the
IMUX,
top spot, the most valuable company in the world.
Z.
Microsoft shares up 1.2%.
6. BRFH, LXEH, MREO, MREO. EXPI. EXPI. 6. ORCL. APLD. Doug. WHLR. Proc. EXPI, BMR. APLD. SMLR. TNXP, PGY. SMLR, SMLR. SMLR. EJH. BRFH. SMLR, KODK, BRFH, again. SMLR. RBRK. RBRK. MICS. TJH. TSLT. MREO. 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 EJH. PDYN RLJ EJH EJH PDYN
Yeah, it's a party today.
BRFH
BNED halted 8:55.31
RVPH.
open in 1 minute. Come on,
RLJ
BMR. You could do it. Give me my 685 here. Put this. Let's move this up here. Just in case.
BTDR
What else we gonna trade today?
XTIA
Man,
BTDR
XTI is getting dumped here. Damn. Jeez. Thank God we did not jump in this garbage.
ORCL CHW
ORCL, new high, all-time high. Oh, Scorpio is making a shit ton of money.
Omer TCON GLW CERS CCL PDYN BNED BNED
BNED just open, guys, here. Damn, let's look at our
BNED.
investments today. Shit. Check my holding here, holding big spread on BNED. Let's see what we got here.
TPG
HIMS is up.
TPG.
Damn, HIMS is woo.
GLW
ENPH is up. Surprise,
AAPU.
even
AAPL AAPL
damn AAPL.
GLW AAPB PRVA BMR
Yo,
PRVA PGY
yo, BML.
GLW
What are you guys trading? GME here again. What's everybody trading?
PDYN
Nobody's trading anything. Everybody on the sidelines. Nobody's trading. GME. Everybody. Telling everybody's GME. Apple and Tesla go nice,
OSW.
bro.
SMLR
DDC. You stay in DDC?
SMLR
SMLR. Yeah, SMLR.
AAPL AAPL
Holy
AAPL
moly, APL. Man.
AAPL ATXG
DDC. Oh, DDC is going still nice. Nice call on DDC here.
YCBDA BKKT BFH Siri TSLR
And the SPY is pushing
TSLR.
higher. Crazy. Crazy, crazy. Nvidia is still
EDTK
pushing. Firm looks like a firm might break out here. Maybe.
TSLT
Then a firm did a sick move here. From
OSW
the $35.
DDYN LLAP BFH
DDC new high here. Good call on Grexter here.
CMRX MICS
I don't want to see a thank you or nothing. You can
TSLR
be quiet. Good job, Grexter. Fire him. Yes.
BNED
He should leave. He should leave on his own. Surprise me like I did.
RNA
Because I'm protecting my investment. I need to protect my investment. I mean, good day overall. I mean, shit. GME is like stuck today. Shit. In these positions. BNED,
GWH.
DDC, BMR. Oh, shit. He's in BMR. Good job. DDC. He has XTIA. Oh, damn. You're in XTIA too? Is that a lot? Damn. You're taking a loss in XTIA. DRCT. What is DRCT? DRCT. Down on this one. Shit, man. Sorry.
BRFH.
I'm not even sure what is that. I've never seen that. What is that? Let's see. DRCT. Oh, it's a small. Another small float here. Oh wow, I traded this one before.
RERK.
Jeez, what is this?
NNBC.
That's a weird company here.
GWH.
What the hell? What the hell is that? Did you do or what the hell? Did it go from here to here? I don't remember. Did I trade this one? I don't even remember, man. Yeah, this is crazy. Crazy chart here. XDIA, I mean
DDC.
CHRS. Not really. Let's break even actually. BMR doing good. DDC. Yeah, I don't remember when did I trade this one. The RCT. It's a low float though. It's only 3 million shares for the RCT. BNED holding
Wow.
GMEs. Looks like GME is stuck in this area here. Big spread here on BNED. Not like huge, but
ARCO.
not the kind of spread I like. That it?
RNA. RNA.
RNA up 30%, lifetime high. So everything is flying.
DDC.
Here goes DDC. DDC looking good here.
TNXP.
Let's move GME up here. Move BNED here.
EXTA. AEHL.
DDC. Good call here
AIXL.
for Grexter, guys. Amazing call here.
VRNA.
Sick call. BMR is touching that support here. Yep.
SGMT.
Support.
GWH.
ORCL Oracle seeing some session highs here.
MYNZ. VRNA. VRNA.
VRNA.
CGNX. AIXI.
GME. So GME is playing in that range here.
AIXI. DDC. HIO.
DC guys, DDC. DC is doing a awesome move here. Good call here. Hit the target. 125. Something halted. Nope. PCSC. Nope. Can ignore that. Looks like BMR is gonna crack here.
RNA. RNA. RNA.
Yep, BMR looks like it's done. Maybe. Let's see if that 6 holds. Sayonara. Damn, went through it like.
JZ.
Mm-hmm.
Dine. 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 Yalla. DWSN. MDIA. DDC. MDIA.
DDC guys, new highs here for DDC.
BNED.
PCSC and IPO coming up. Perceptive Capital Solutions is quoting now, should open coming up. The IPO priced at $10 a share. That's Papa Charlie, Sandy Charlie.
Oh, so that's not a test. Okay.
PCSC.
So that is an IPO. Okay.
TNXP
7.5
DDC.
million shares. Oh, what is this company? Yeah, but what is it? Perspective Capital Solution. Looks like an investment firm. MGNX. Ew. Too spicy.
TRML.
Doesn't have
TRML.
so much
TRML.
172,000. There you go, another one. TRML. Looks like it. TRML. Also
ESOA.
70,000 volume. Come on, BMR, what are you gonna do?
CYRX.
Nvidia, NVDA shares seeing some session highs here
Yeah, Nvidia's
on
hitting
increased volume, up
hitting
3.8%.
fibs here.
Nancy Victor Delta Alpha, NVDA.
Nvidia is hitting my fib level here. Yep.
ULTY.
Fibonacci.
S&P futures also hitting highs of the day.
Wow.
54.45, up 1.1%.
Charlie's gonna have a heart attack saying it. The MGME is like one of those days. It looks like it's gonna be one of those
MTC
sideways.
Coco.
MTC penny stock 0.3
COHR.
moving. It's up 16% on almost 2 million volume. DDC is still pushing slowly here. 140. It's about to hit the 150 target here. For
DDC.
Dexter. Here we go. It's getting close to the 150.
TCON.
That's a nice miss here. Good volume too. So far holding steady.
COHR.
Reverse here or
COHR.
not? I'm gonna go make me a cup of coffee.
Coco. RNAH, GDHG, RNA, DRS, RNA, RNA. MTC. LTBR. TNXP. PMCB. BITU. LTBR. FANH. RYLD. MICS, AKYA. RYLD. Proc. Proc. Vist. Proc. Proc. ATSG. FANH. MODG. Flux. LYFT. Flux. LTBR. STAA. TKC. OPCH. FANH. DDC. TKC. GSIT. WETH. NTZ. WETH. Trib. WETH. WETH. RNA. Flux. QTI. ADVM. MICS. DWSN. FANH. RYLD. XELB. CDG, RYLD, GDYN, KPRX, Krone, ADVN, GWH, GDYN, DWSN, GDYN, SPSM, IMMX, SPSM, RNA, SPSM, SPSM, GDYN, SPSM, RYLD, SPSM, APG, XTNT, DDC, RNA, RYLD, cores, OXSQ, ATAT, 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 SEER, SEER, RYTM, SEER, SEER, MDIA, SEER, HGTY plus,
AMZN, East charging
MICS,
employees for trying to unionize. That's Alpha Mike Zulu November, AMZN.
SDIG,
Coming up in about 2 minutes, the crude oil inventories,
Cipru,
weekly distillates, and gasoline inventories.
Kaba. Sear. 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 RNA. Kaba.
Good
SDIA.
call on MDIA. Looks nice, man.
Crude inventories a build of 3.73 million versus a draw of 1.2 expected. Crude moving sharply lower here on that EIA weekly distillate stocks, 881,000 versus the
DDC.
500,000 expected, and gasoline inventories a build of 2.566 million versus the build of 250,000 expected. Again, crude futures moving sharply lower here on that data.
Sifru. Sifru. SCO. Kazi. DDC. SCO. SCO. Kazi. KRE. HYLN. Kazi. HYLN. KRE. DDC. KRE. 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 MDIA. Kritia. 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 CHMI. FITB. FITB. BZH. WBS. KREBS. IMUX. FITB.
Caterpillar increased dividend from 130 to 141 per share and increased its share authorization by 20 billion. Caterpillar may now purchase up to 21.8 billion of common stock under its repurchase program. That's Caterpillar CAT Charlie Alpha Tango.
IMUX. CHMI. 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 Kritia. KRE. OCFC. KRE. DDC. TSLT. KRE. TSLT. KRE. KRE. BKU. TFC.
KRE.
TFC. AGNC. 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 NRSN. DDC. NRSN. NRSN. CHMI. AGNC. AAPB. MFA. RETL. AGNC. RETL. SONM. NRSN. AGNC. AGNC. EFC. AGNC. AGNC. CHMI. CHMI.
Hey, Vic,
CHMI.
What did I miss?
CHMI.
Hey. What's up with Greg Cole, Gregster? We said we're not gonna talk about
GT.
that. Good job, man. Killed it.
SCO.
Hit all these targets there. GME finally. Okay. Looking good.
AFMD.
Yeah, attaboy. Yeah. Wow. I hope you guys are green for the day.
MLNK. MLNK.
What? How's everybody doing?
MLNK. MLNK.
Again, you and GME, man. God bless me, man. Man, that ZVRA, man. What the hell? What the hell is up with this? That's the third day in a row this thing keeps going. Look at this. It's going on nothing. But it's up like 2 days now. Up on nothing. ZVRA. Yeah, maybe add this to your list, Grexter. It's a low volume, but ZVRA here. Yeah, Scorpio, I think you need to stop, man. I think GME is your kryptonite. Like, you need to stop trading. Man, what the hell is BMR gonna do here? I was thinking for a second there to maybe go short, but still holding. So I'll keep holding.
GWH.
No, man. I get it anyway. That's why I'm here. I'm here for the praises, man. I'm not here for the money. I don't care if these guys make money. I'm here for the praises. So how's everyone doing? Come on, what is everyone? Is everybody dead today or what? I feel like everybody's like sleeping or something. You guys are green or what? I mean, nuts. Beside nuts, the firm was a good short, man. Here, I don't know if you've seen a firm. Wow, the SPY is just ridiculous. UPST is boring, man. I don't like UPST. Small green, nice. Green on AMD. Oh, nice. You love AMD. Man, you're gonna start getting me playing AMD. It's like every day you keep saying AMD, Dragonfly.
AAPB.
Yeah, look at AMD stuck in this.
AAPB.
Stuck in this shit here. AFMD. AFMD. Damn. Very light volume though. Very heavy algo though. But I mean, algos today, I mean, I'll ride any algos today. I don't mind. BMR. It's on the VWeb scanner. I'll take that. Dun, 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 dun. Not trading today. I'm sick. Sorry to hear that, man. You feel better? That's it.
PGYWW. AAPB. MICS.
Something else. Hold it. Oh, PCSC. The IPO is on, guys. PCSC is on. Just open here.
PCSC shares open for trade. Perceptive Capital. That's an IPO for today. Shares opened at $10.06. The IPO was priced at $10. That's PCSC. Popeye Charlie. Sandy Charlie.
CYH. CANF. 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 DDC. CANF. BMR. AXGN, ARFH, AXGN, BMR. Cocoa. BRFH, CRDL. BRFH. PRSO. Pixie. 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 CRDL. DDC. Pixie. CRDL. DDC. Crone.
DDC. Here goes DDC. Yeah, nice boost GME too. Yeah, GME needs to break, man. It needs to break this line here. If it breaks, it's gonna go. And BMR, that was a hell of a drop. Sucks. Wanted to make more money on it.
DDC. DDC.
DDC. Good call, man.
LICY. FTF.
DDC, great call. Damn. China stock going.
LICY. BKLN. KRNY. LICY.
Roadzen onboards new
LICY.
commercial auto insurance partner in India, projected to deliver over 10 million in annual revenue. That's ticker RDZN, Romeo Delta, Zulu, November.
DDC.
Collaboration is
BMR.
projected to generate approximately
LICY.
65 million in gross written premiums annually, adding upwards of 10 million to Roadzen's annual revenue
DDC.
run rate over the next year. RDZN.
LICY. LICY. CKPT. DDC. Omer. CFG. UWMC. Vaughn. CFG. HYLN. Omer. CFG. CFG. CKPT. CFG. DDC. UWMC HYLN. Vaughn. CKPT. ZKH. DRCT.
Yes, it's halted.
BNED.
BNED. Wow. Look at BNED. Good job, man. Did you add to the list? Shit. It's a big ass list, man. MDIA, FMD, MDMR.
GameStop, ticker GME, shares spiking to the highs of the day. Shares up 5.3%. That's GME. Golf, Michael, Echo.
Did you sell? What? You're out of the. Oh, you're still in DDC. Okay. Good job, man. Killed it on DDC, bro. Great, great call, man.
MICS CIFR. 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 PRSO. HUT. CIFR. HUT. 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 MGOL. HUT. DRCT. AJX. UWMC.
Nutrien, ticker NTR. CEO says pursuing
ARBK.
divestiture of retail assets in Argentina, Chile, and Uruguay. Says Co will continue to review its footprint to drive down operating costs across its Brazilian business.
AAPB.
Nutrien expects a continuous rise in costs alongside a
AAPB.
rise in global demand. Says retail assets in Argentina, Chile, and
AAPB.
Uruguay have accounted for around 2% of retail earnings. That's ticker NTR, Nutrien.
JDC. UWMC. AAPB. Prague. HGTY Plus. BMR. Prague. DDC.
And DDC Enterprise at the highs now, $2 up 277%. Delta Charlie.
UCAR. PGY. DDC. PGY. PGY.
Damn, DDC, my god, here.
Vaughn.
Jeez.
HGTY Plus. Nouveau. PRSO. PGY. BMR. PGY. HRTG. HRTG. PGY. 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 Kritia. SCLX. 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 MGOL. FRZA. DDC. COCP. MGOL. MGOL. COCP. COCP. FLGC.
You're not selling any? You haven't sold any, huh?
MGOL.
Crazy guy.
PTN. MGOL. HGTY plus.
Oh, you jumped back in? Oh, okay. Yeah, I missed that halt here. KGME guys, we're going for that
LGVN.
3230.
LGVN. Kava.
One is the halt
Kava.
1003, 1008. Oh, that's in a minute.
AAPB.
Just in a minute.
YHGJ. AAPB. ENSV. ANSV. CERT. Kava. Kava. ENSV. ENSV. DDC.
EDC is on.
DSV.
Good luck, guys. Good luck. Man, I should have jumped in here. But I missed it.
BNL.
Damn. It's gonna halt. Shit. Almost halted here at 228. Yeah, it looks like it's gonna halt.
AAPB.
Shit, it's gonna halt.
AAPB.
Damn, they are stopping the shit out of it.
FAMI.
Oh, they didn't. They didn't halt at 228. Damn. Damn, this thing is getting intriguing here. Man, should I jump in? I can jump in. Did it halt? Gonna halt? Oh no, no, I was pressing no. I didn't get it. No. Shit. Oh my god. I pressed bye. Doesn't want to. No, oh my god. Shit. Okay. And I tried 238, 237, nothing. Kept hitting it. One freaking. Oh, shit.
Omer.
Well, good luck to you guys.
Omer.
Hmm.
HYPR.
Oh man, that sucked. Wow, that's a hell of a freaking move here.
AIHS. AAVB, LGVN, LGVN, LGVN,
GME. Look at
FLG,
GME here.
Omer, IHT, LGVN, LGVN, Kritia, QNCX, DUOT, LGVN, 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 ALRN, CNFR,
BMR. I mean GME. GME. GME.
DRCT,
GME, guys. GME.
LGVN,
Finally, that's a big break here, guys. The trend line is gonna be a big
LGVN,
break here.
LGVN,
Here we go. Tried it again. Failed again. Yeah, that trend line, it's gonna be blue skies after that. We're gonna get into a major area here if this thing breaks. This is gonna be very nice for GME if we get in there.
SITC, SITC,
Yep. Man, if we can get to 34 here, we're gonna get to this area here. This area is very interesting here. We can get in this one here. Between 35 and 40, this whole zone here. Yeah, we're testing here. So far, it's looking pretty nice here. I mean, I'm chilling still on my shares, so I'm up a lot. So I'm gonna keep pushing with this one. Good luck.
Nouveau,
Here you go, another test.
DRCT, LGVN, 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 LGVN,
And we're above it. Sitting on it now. Let's see what happens.
NTWK,
All right, looking dandy here.
DRCT,
LGVN is moving up 36% on 700,000 shares.
Blue, UCAR, CYH. MHUA. INBS. LZ. LZ. HRTG. BMR. LZ. NTWK. HRTG. TH. LZ. AIXI. LGVN. 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 EWM. LGVN. LGVN. Trib. LZ. LZ. DDC. AEHL. AEHL. SONM. LGVN. 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 DDC. LGVN. 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 LGVN, 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 LGVN. RMCF, AEHL, GWH, 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 SONM, LGVN, 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 SCLX, LGVN, SONM, SONM, SCLX, SCLX, MGOL, 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 MGOL. DNUT, DNUT, DNUT. SONM. MGOL, MGOL, MGOL. Kava. LGVN.
Shares of Longeveron pulling back now from the highs. Report out from Zacks gave it a $15 price target. That's $15.10 price target. That's Lima Gulf in November now with $1.32. LGVN.
MGOL. SONM. Kava. MGOL. Kava. Kava. BMR. HUD. Kava. Hive.
NVO, Novo Nordisk, Michigan's largest
TSLR.
insurer to drop weight loss drug coverage. That's November Victor Oscar.
SDIG.
Shares of Novo Nordisk falling here now
SDIG.
a bit, 142.63, up 84 cents, pulling back on some volume on that news.
TSLR.
BIIB, Biogen executive, says Alzheimer's drug market will develop faster with Lilly in play, but can't speculate what's going to happen with donanemab's label. That's BIIB and LLY.
MGOL. MGOL. ENSV. MGOL. MGOL. DDC. CANF. EEX. LGVN. EEX. Prague. Prague.
ENSV, penny stock and Servco moving, getting a pop here. Echo November Sandy Victor, ENSV.
UE. ZKH. SAN. ZKH. UE. EEX. UE. Prague. SLNHP. UE. DDC. ENSV.
LXEH, another low price stock, moving now up 27%. Lima X-Ray Echo Hotel, LXEH. Coming up at noon, the WASDE report. And then at 2 p.m. Eastern Time, the Fed rate decision press conference at 2:30 p.m.
LGVN. RMCF.
White House said White House National Security Advisor Sullivan says U.S. is monitoring Russian Navy in Cuba closely. CCJ, Kamiko shares getting a small pop here, seeing the June $56 calls trading.
DDC. JG. SONM. LGVN. GWH VMD. ENSV. TRIB. PAR. PAR. ZG. 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 Z. ZG. ZG. Z. PAR. ZG. GWH. DRCT. GWH. TRIB. GWH. GWH. MXCT. MXCT. DDC. QNCX. MXCT. GWH. ORMP. ORMP. LGVN, RMCF,
EHang Holdings announced that the EH-216S pitchless electric vertical takeoff and landing aircraft completed its first autonomous in-taxi flight in Mecca, Saudi Arabia. That's Echo Hotel, EH.
Vaughn, ZKH,
SPEC Spectre Holdings getting a pop here. Another low price stock. Sandy Papa Echo Charlie.
Vaughn, MIGI, BTDR, DDC, BTDR, Prague, MIGI, BTDR, IMMX, LGVN. MIGI. BTDR.
Nutrient NTR Nutrient says it's
MIGI.
trying to grow its seed shelf and would
MIGI.
like to grow more in the Corn Belt. That's NTR.
BTDR. MICS. DDC. DNLI. AIXI. LGVN. PMCB. BTDR. BTDR. Rare. SRM. BTDR. DDC. Dro. LGVN. LGVN.
WASD report is out.
LGVN.
USDA estimates 2024, 2025
LGVN.
wheat end stocks 758 million, 758 million bushels. Soybean end stock 455 million bushels. Corn 2.102 billion bushels.
Flux. TNXP. VTSI. VTSI, HUT. VTSI. DDC. LVO. VTSI. LGVN. MICS, CCTG, BTDR, BTDR, MODD, DDC,
HIMS, Hims and Hers Health, new highs now up about 10%. Hotel India Michael Sandy.
BTDR, LGVN, AILE, 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 BTDR, BTDR, MICS. FLRN. LICY. OSW. BTDR. DDC. OSW. LGVN, BTDR. AZTR. KAVL.
Stoltenberg said China is also heavily modernizing their nuclear capabilities.
KAVL.
LGVN, Longeveron, moving again now up 71% off the highs, $1.40 on that Zacks report. Lima Golf Victor November. Steve Weiss on CNBC buys Uber. UBER.
DDC. KAVL. LGVN. LGVN.
LGVN, Longeveron, shares hitting $1.50 at the high now. Lima Golf Victor November.
LGVN. LGVN. TBIO. CCTG. CCTG. KAVL. DDC. LGVN. 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 LGVN.
LGVN, Longeveron spiking again now, $1.71 up 100% now.
KAVL. GURE. LGVN. KAVL. Vaughn. LGVN. ARMP. LICY. LGVN. 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 AIHS, LGVN, SVMH, 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 DDC, NEOV, AIHS, 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 ALDX, MXCT, MXCT, LGVN,
LGVN, longevity one share is pulling back now $1.61 from the highs, pulling back. NEOV,
NEOVG, DDC, JDZG, NEOV, JDZG, 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 AIHS, JDZG, GGT, LGVN, GWH, GWH, OSW, OSW, GWH, SCLX, AIHS, SCLX, LICY, LICY, OMEX, GWH, LICY, OMEX, AIHS, GWH, DDC. TBIO. OMEX. TBIO. LGVN. AIHS. MTEM. AIHS. MTEM. BRTX. TBIM. OSW. DRCT. BRTX.
Coming up at 2 p.m. today, the FOMC rate decision, and at 2:30 p.m. the press
MTEM.
conference. After the close, earnings from Broadcom, AVGO.
GSIW. GSIW.
MTEM, molecular templates, another low price stock getting a pop here now. Michael Tango Echo Michael.
AIHS. IGR. DDC. BRTX. DRCT. TBIO. DERM. LGVN. Flux.
Yeah, like
BTDR. MTEM. TBIO. DRCT. NCZ. DFSD. MIGI. AIHS. DDC, MIGI, 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 LGVN, TBIO,
AI, C3 AI CEO on Fox Business. Alpha India up about 2.3%.
DBGI, SDIG, MIGI, DRCT, AIHS, SDDC. MIGI, 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 MIGI. LGVN, TBIO. BNED.
LGVN, another pop here for Longeveron. Lima Golf Victor, November now up 100% again off the earlier highs. Final trades on CNBC, UBER Uber, FEZE the Euro Spider, SPGI, and DDOG.
AYRO,
Final trades
SDIG,
on CNBC
WGMI.
again, the Spider Euro Stocks 50, UBER Uber,
AIHS,
SPGI,
SDIG.
S&P Global, DDOG, Datadog. Final trades on CNBC.
DDC.
Fed rate decision coming up in 1 hour at 2 p.m. Eastern Time. S&P futures ticking higher here, 54.4350, up 1.11% now off the earlier highs.
LGVN. TBIO. SLE. SLE. DRCT. DDC.
NKGN Biotech presenting updated phase 1 data on SNK02, allogenic NK cell therapy for solid tumors at Allogenic Cell Therapy Summit. That's November, Kilo Golf November, NKGN. GME GameStop, the June $128 calls trading now on Golf Michael Echo.
LGVN. Of tw. BSCS. GLBZ. DGHI. NKGN. NKGN. DDC, QNCX. NKGN. LVO. NKGN. LANV, LGVN, Flux. GRDI. KINS. SCLX. LANV.
EA and GME, Electronic Arts and GameStop. Tweet says EA Sports College Football 25 and GameStop have collaborated on a homecoming pack edition of the game for $149.99. That's EA and GME.
LVO. GRDI. DDC. Beam. LGVX. Beam. CANF. Beam. 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 MICS. LVO. CANF. KRNY. CANF.
LGVN, Longeveron getting another pop here, $1.67. Lima Golf Victor November trading off the highs, up 106% now, LGVN.
DDC. LGVN. SONM. SONM. AIHS. T-Blah. DDC. CANF.
ELV, Elevance Health, Elevance Executive says Medicaid redeterminations had impact on first quarter footprint. That's at the Goldman Sachs conference. That's Ecolima Victor.
NEOV. LGVN. SONM. SONM. AIHS. DDC. LGVN.
Elevance Health executive said Medicare earnings are growing this year.
NEOV.
That at the Goldman Sachs conference. That's Ecolima Victor, ELV.
Cocoa. NEOV. AIHS. DUOT. DDC. NEOV. DUOT. MCVT. LGVN. NEOV. NEOVU. GLBZ. Cocoa. Cocoa. NEOV. STAA. DDC. HUT. HUT. LGVN.
Coming up in 15 minutes, the Fed rate decision, and at 2:30 p.m., the FOMC press conference.
And for the
LEV
NASDAQ,
Southwest
which is the
Air,
territory
Artisan
we're in right
Partners
now. Look
Global Value Team sends letter to the board of
today, I think it's
Southwest
up
Air.
15% for the
They own 1.82% of the company's outstanding shares, urging the board to reconstitute itself and upgrade the company's leadership. That's LUV, Limiaform Victor.
So Apple number one, 3.329 billion, surpassing Microsoft by just a little bit, which is not too far behind at 3.2 today. And get this, Apple has traded more than 116 million shares already today. That's nearly double its 30-day average of 64 million. Again, as people try to game out whether it's the company doing buybacks, I mean, it's been a huge two-day move, and it's all going back to Monday's AI announcement. Although the stock really took off yesterday when it was up 6%, now it's up nearly 5% to 217. It's on pace for its best two-day performance since August of 2020. Laura Martin, some others speculating it's because the company can now do buybacks, but regardless, this is a huge and significant move by Apple, significant for the whole market. Elsewhere, GameStop higher today, up 8% this week. It's around $30 again after Roaring Kitty seemingly is holding on to his positions. But Andrew left Citron Research, posted on X, it's out of its GME short, not because they think the company will turn around, but saying their $3 billion cash raise from the share sales gives them, quote, enough runway to appease their cult-like shareholders. Citron signed off with, quote, by the way, the Kitty live stream was an insult to capital markets. In case you had any doubt of where they stand on this, and GME is now lower by about 2%. Coming up, the Fed's steep rate hikes, increased borrowing costs across the board, 30-year mortgages, 7% credit card APRs near a record high. But one economist says a key segment of inflation might be beyond the Fed's reach and is acting like a tax on consumers. That's next.
LGVN. XWEL. PRSO.
Welcome back. Today's headline CPI number flat. It was much lighter than expected, but our next guest says it's not the Goldilocks scenario
TRSO.
necessarily, as needs inflation, as it's called, remains sticky. And he says that'll slow down the consumer and the economy more broadly. But Powell and company may disregard it as they focus on their so-called super core targets. Joining me now is Jake Obina. He's senior U.S. economist at Piper Sandler. Jake, it's great to have you here. I think this is really important to mention. Welcome.
Hey, Kelly, nice to see you.
And so explain what's going on. The things that people have to buy is running at what inflation rate versus the things that they might prefer or want to buy?
Yeah, so if you took a holistic view of inflation, I think there's no doubt that we've seen some significant progress, right? I mean, if you take the shelter component out, which everybody knows has the problems.
All right, Rivian shares
actual
getting a
rents
little
in the
pop
market,
here.
and inflation's right around the Fed
report
targeted too. But when you
from
look beneath the
EV
surface, the stickiness in inflation is in
DHL
these parts of
on
consumption
track
that
to
the
become
consumer
Rivian's
can't
first EV client besides Amazon,
DDC.
AMCN.
prescription drugs, insurance, it's in auto insurance, it's in housing insurance. It's in just a plethora of things that make up the consumer basket that are about 25% of consumption that, again, you can't diversify away from. And if you look at that basket, it's running at about 6% year over year, even after today's kind of lighter number.
Wow.
That's a couple of things, right?
TRSO.
It's putting pressure on discretionary consumption because it squeezes consumer pocketbooks, essentially. And so it reduces the amount of money that's available to spend on other things. And if you see the transmission mechanism from that sticky inflation to the discretionary parts of consumption, discretionary inflation is all the way down to zero. It printed 0.1% year over year
It was zero.
in the May
Wow.
report. Yep.
Okay.
0.1. And if you look within pockets, some of them are running negative, right? So I think, this squeeze on consumers from very elevated non-discretionary is having a feedback loop effect to discretionary pricing power in a negative way.
Yeah, I mean, there's deflation already. If you look, as you've highlighted in others, the digital numbers that Adobe puts together, those have 5% deflation in the latest report. Apparel, furniture, electronics, all the usual suspects. It's been going on for 2 years now. What should the Fed do? Do they then say, okay, well, these, and a lot of the parts that are needs-based inflation are also very, very
LGVN.
Supercore is kind of the wrong thing if you want to look at the things that you actually have influence over. But I think we are going to get relief because, again, it is a catch-up to asset
TRLA.
values that went up for durable goods in particular, autos, homes, et cetera. But you're seeing some downward pressure there in the auto space in particular, right? You got new vehicles down 5 months in a row now in terms of price. This was in the CPI, down 7 of the last 9 months. And look at the inventory. Look at the supply and demand mix there, right? Inventories in real terms, in inflation-adjusted terms, across the supply chain are hitting record highs. Right?
That
That's
really
shocking
surprised
because
me.
during the pandemic, I mean, we were starved of inventory. Now we're hitting record highs, and we're hitting record highs in an environment where affordability stinks, right? Because rates are very high, and we're still seeing these elevated prices, even though they're down recently. And so unit sales are still running very weak into an increasing supply backdrop. Production schedules are ramping up.
Yeah.
Right. So you're going to see downward pressure on price there, and eventually you're going to see a
LGCV.
cooling off on the insurance premium side from that as
TRO.
well. But I think it's going to take some time.
So, and in listening to your answer, I've now forgotten my question, but I was basically going to ask you then, if the Fed is running things too tight, if they're effectively keeping rates higher than they should because auto premiums are up and all the rest of this, I mean, would this argue then for them to cut rates significantly in the near term or risk a slowdown? Or now I remember I was our guest top of the hour. She said, no, if they start easing too quickly, service inflation is going to pick back up.
I think they're hard pressed to point to service inflation that's actually on the discretionary side that has any risk of ramping back up. I would argue that, the fiscal impulse that you saw over the course of the pandemic, the $2 trillion plus in excess savings to the household sector, that was the main driver of inflation.
Totally.
Excess savings hit negative in April, right? This is the first time it went negative. And so you've taken that ammunition out. I think, again, you're going to be hard pressed to see discretionary prices move higher from here. And in fact, I think what the Fed's doing is creating more bifurcation in the economy, right?
Exactly.
So
Yeah.
on the aggregates, things look okay. S&P 500 earnings look fine.
Yeah.
Look at the S&P 600, right? They're down. Look at small business. It's down. Look at kind of mid to lower income tiers.
Yeah.
They're suffering from higher interest rates.
Jake, I appreciate it. Thank you for
yeah.
joining me today. Like I said, read the newsletter for more. Jacob Bina from Piper Sandler. Perfect way to tease the Fed decision. It'll be right after this break on Power Lunch. Don't go anywhere.
Coming up in 5 minutes, the
TROL.
Fed rate decision.
DDC. CVGI. 6. 6. LGVN. 'Prog.
Good afternoon, everyone, and welcome to Power Lunch alongside Kelly Evans. I'm Tyler Matheson. Glad you could be with us, and we are just minutes away from the Fed's decision on interest rates. Let's get a check, meantime, on where the markets stand. The S&P 500 and NASDAQ both hitting records today, up more than 1% each. Apple shares continuing to rally following its AI announcements on Monday. I guess the information's starting to sink in there. The stock gaining nearly 10% so far this week, which is about $300 billion worth of market cap.
Just extraordinary.
Really
I'm excited about the Fed, but I'm really excited about that Apple story. Okay, here's the 10-year as we head into the decision. 264, the lowest since the beginning of April, after this morning's CPI data came in lower than expected, and raising hopes that the Fed might turn to PCE data later this month and see a similar downward trajectory. The market now pricing in only 2 rate cuts this year, or as many as 2 rate cuts this year, I should say, after that release.
All right, let's get right to our all-star panel as we are just minutes away, as we mentioned, about 2 minutes away from the Fed decision. We've got Kristen Bitterly of Citi Wealth, David Kelly of JP Morgan Asset Management, Michael
1 minute to
Kushma
the
of Morgan
Fed rate
Stanley
decision.
Asset Management. Let's go around the horn quickly. Michael, what are you expecting the Fed to do? I can anticipate. And what do you expect it to say?
Well, I expect them to make no changes in terms of the interest rate strategy. But
GILD, Gilead Executive, says company will look at continue to look at smaller deals worth mid-single-digit billions on average every few years. That's GILD.
But that we're making progress, but not enough progress going forward, and that we're still on track for rate cuts at some point later this year.
But you think that it opens the door a little bit, but you're skeptical that there will be a rate cut this year. Am I correct?
I'm skeptical there'll be more than one, but I will be the first to admit that today's inflation data was quite shockingly low. Maybe it's just a correction from the excessive numbers maybe we saw earlier this year, but the average
10
domestic
seconds.
inflation is still reasonably perky, although still coming down on a year-on-year basis. There's a stalling out of inflation, which would suggest a go slow attitude with regard to rate cuts.
Kristen, what do you think? And I'm tickled by that reason.
Fed leaves discount rate unchanged at 5.5%.
So I would agree in terms of inflation, it gave a little bit of relief this morning. And I'm looking for, particularly within the statement as well as the conference, more
FOMC
information about the
voted
employment
12 to
backdrop,
nothing
because we did get
for the
concerted
Fed
signals
funds
when
rate
we were looking
action,
at
has
the
seen
FRB
modest
tools,
further
whether we were
progress toward a
looking at
2%
JOLTS. There is a
inflation
cooling
goal in
that's
recent
happening in the
months.
labor market,
See
not a
Fed
contraction,
funds rate
but
at a
cooling.
median of
And I think
5.1%
that
at the
Chair
end of
Powell will give us a sense of
2024,
how they are viewing that,
4.1%
which will then
2025,
determine
3.1%
whether we
2026,
get,
2.8% in the longer run.
David, give us about 20
Raised
seconds.
2024
TWM.
inflation forecast to 2.6%, up from 2.4% in the March forecast. Sees 4% unemployment at the end of 2024, unchanged versus March. Sees 2.1% GDP growth in 2024, unchanged versus March forecast.
I said 20 seconds, and you hit it on the nose.
S&P
Thank you
future is
very
dipping
much.
here a bit
David,
now,
we'll get back to you in just a little bit.
54.27.
Meantime, let's go to Steve Leisman now for the Fed's eagerly awaited decision on interest rates.
The Federal Reserve in its June meeting leaving interest rates unchanged and continues to say that it won't be appropriate to cut interest rates until it's gained confidence that it's headed towards its 2% target. The Fed on average now projecting one rate cut this year, down from 3 in the March forecast. 4 officials, in fact, are projecting no cuts this year, up from only 2 in March.
Fed
One
said
official
inflation
actually
has
says
eased over
no
the
cuts
past
this
year, but remains elevated.
Prague.
for Fed funds rates this year and next. And of course, interestingly, in the long run, the neutral or long run rate now up another 0.2 now to 2.8 from 2.6%. They only accounted for the recent progress with this morning's low inflation, by the way, along with the good numbers in April, saying there has been modest further progress towards the Fed's 2% target on inflation. They had noted a lack of further progress in the March report.
Gold pulling
GDP
back
outlook unchanged at
following the
2.1%.
decision.
%4 this year, a tick higher for next year than had previously been forecast at 4.1%. That's, of course, interesting because we're already at 4%. They did say in the statement unemployment is low and the job market is strong. Core PCE, interesting here, too. The average for officials now is at 2.8%, up 0.2, even though the street estimates after this morning's report are that it will come in at 2.6% this month. So they're projecting, in fact, a degradation or a decline or an increase in inflation this year on the core. In fact, only 3 words were changed in this policy when it came to the economy and the policy sections on it, and that was about the inflation that I read already, otherwise a carbon copy. Guys, an idea of how hawkish these projections are, I will tell you this, and you can write this down at home if you're playing. There were 10 officials in the March projections at 4.625 or below in March. Now, not a single one is there. They're all above 4.875 for this year. So it feels like either they ignored the progress on inflation this month or last, or there was some kind of a coup of the hawks in the Fed committee room this meeting.
All right, Steve, stick around and let's get back to our panel for some reaction here. Let me begin with you, David, if I might. Is the market likely to like what it's just hearing?
No, it won't. I think the market will have been responding to better news in inflation this morning. But of course, the summary of economic projections, that was revised since March, not since the May meeting. So that's relative to what they thought 3 months ago. But still, I think it was reasonable to say that, of the officials in March,
VOXR MCVT
25 basis points at the end of the year, not 50. So this would be a hawkish
S&P futures recovering now, moving back.
The Fed doesn't project a September rate cut on average.
54,
But it's much
32,
harder to
25, or
implement on. So,
49.
of course, we're just playing with small numbers here and decimal points. But overall, the market, which was reacting very well to this morning's CPI report, will be somewhat disappointed the Federal Reserve now sees only one rate cut this year.
That said, Michael, I think the market also understands that the Fed is itself kind of a lagging body. Their meeting started yesterday. We all know they're not going to get the 8:30 CPI report, go into the meeting.
ORCL.
Everything that we did yesterday, we're going to come up with a different decision, and they wouldn't hang anything on a single data point anyway. So perhaps this gyration that we're seeing in response is saying, yes, the Fed still sounds hawkish, but that's because the data prior to the last couple of weeks was much more so than it's probably going to be now and going forward.
Yeah, I think that is true. The employment report was, quite strong overall. We're generating jobs 250,000 plus per month. The real economy now casting for Q2 is now up well over 2%. This year, unless there's a sudden shift in the economy. There's a lot of good things going on in the economy. A lot of sectors of the economy not doing so well. But in aggregate, things are going pretty well. So my view has been, why mess with it? Things are going pretty well. Inflation is still well above target. There's a stickiness to what's left behind for the various reasons we've heard in the past. It's slow to come down. Interest rates are having a less powerful impact on that part of the inflation process. So let's just sit back and wait for inflation to get better. With is how tight is monetary policy? Where is the neutral rate? How fast can this economy grow medium term? We're certainly doing a lot better than we were in the pre-COVID, post-GFC world, and that would suggest that if growth can grow faster, policy rates may have to be higher for longer. We've thought all along that we're not going to see a major rate cutting cycle. We're going to see a mid-cycle adjustment of 50 to 100 basis points, and that's probably it.
Kristen, you say or you said just a moment ago that we're experiencing in the labor market maybe a cooling, not a contraction. Is what the Fed is doing and saying today consistent with that view that the economy and the labor market may be cooling?
Looking at the statement, I don't think very minimal things change within the statement. But I think in the press conference, this is going to be important. What data points does Chair Powell actually talk most about? Because yes, you had non-farm payrolls come in very hot, but when you look at JOLTS, when you look at the ISM surveys, right, that we've seen a slowing within the labor backdrop there. There's even some estimates that we could see revisions to non-farm payrolls. And so I think the language and the tone that Chair Powell uses in terms of speaking about the employment backdrop, yes, it's strong, but if there's signs of cooling, this can give a little bit more insight. And I think the biggest surprise in this is really the 3 cuts down to 1. I think that is something that the market was not anticipating. Seeing 3 to 2, anticipated 3 to 1, not so much.
No, I think that's absolutely a great point. So, David, let me ask you about that. If the market this morning was at 2 cuts this year after CPI, now the Fed says it's only at 1. How do you think that gap gets rectified, and how might we expect to hear Chair Powell talk about that?
Well, I think one of the things he said in the past is that participants do have the option of updating their forecasts based on incoming data during the meeting. So presumably they did have the option of changing their forecast today based on CPI, but perhaps they were reluctant to do that based on one data point. Overall, we still got plenty of CPI reports to come. And to me, the most interesting part of the CPI report this morning was auto insurance finally cracking from this 22% year-over-year gain that we saw in April to a negative 0.1% in May. So if auto insurance continues to back off here, then the measures of inflation will be coming down. I think September may come back onto the table. But for right now, I think it'll stay off the table in the futures market until the Fed shows some signs of getting a little more dovish after this sort of tilt towards a somewhat more hawkish outlook.
Steve, you have some thoughts?
Well, I think what looks to be happening now, is the market looks to be ignoring this statement and these projections, and I'm not sure the market's wrong here about that. I think the market is processing the data in a way that's different from the Federal Reserve. The market, I think, showing a steadier hand in its take on the data. The Fed I think it feels to me like this is a statement that you would write in reaction to the inflation numbers we got in January, February, and March, and it seems to ignore what happened in April and May, which seemed to me to put us back on the tack and the track we were on at the end of last year, which was further progress. Would you so drastically change, and not just the hawks on the committee, but almost everybody lifts it up, gets rid of rate cuts. I think what David is saying is rather smart, the idea that, hey, the Fed may not see it now, but they might yet be cutting in September if the data continue the way it's been going.
All right, Steve, thank you very much, and thanks to our panelists. For now, we're going to end the conversation here and move forward, Kel.
Yeah, let's see how more of how the market's reacting. In fact, Bob Bassani is over at the New York Stock Exchange. Bob.
Kelly, this is a negative for stocks, but a mild negative. So the base case was relatively few changes in the economic policy, and that's what we saw. The prior statement did cite a lack of progress on inflation. That has been changed to now there's been modest further progress on inflation, so a mild upgrade on the battle. But the real problem here is the dot plot. We were expecting 2 rates cuts. Now we only have 1, and 4 people said no cuts. That's a little bit of a surprise. So that's a bit of a negative. So let me address Steve's issue here about why isn't the market down more?
DDC.
Look at the conditions right now. We have disinflation, clear trend right now. We have rising earnings. We have a shiny new tech paradigm in artificial intelligence, and we're a couple years out of a recession. I think that's enough to support the economy. A lot of people talk about 1995 and the parallels. The Fed started cutting rates in 1995. They had a shiny new thing. It was the internet at that time. They had rising earnings here. So there are some parallels here to that are being used right now. The problem is this Fed pivot. Because if the Fed indicates they're going to pivot sooner rather than later, that's a sign that they're clearly winning the war on inflation, and we don't quite have that. So that's what the problem is. And if there is a downside to this, I would say that right now, I think it's probably going to prevent more money from coming into the market. Maybe that's a good thing. We're at new highs right now, but I think that's the clear downside. But as you can see from the very modest decline here, when you have disinflation, rising earnings, a big shiny new tech paradigm in the form of artificial intelligence, and a couple years out of a recession still growing, that's enough to support the market. Guys?
And it is for now. Bob, thanks. We appreciate it, Bob Bassani.
All right, let's go to Chicago for a reaction from the bond market and Rick Santelli. Hi, Rick.
Hi, Tyler. Indeed, modest progress is what everybody seems to be hanging their hat on. And as you look at a 2-year, that was right around 268.
Rare.
Yes, we've moved up a couple of basis
LGVN.
points. Then open the chart up to Jobs Friday. You could see it's holding right and coming into that zone. Look at a 10-year. 10-year was right around 4.25, so it's up about 3 basis points. Look at where it's at based on Friday's jobs report. And finally, the dollar index. Subtle improvement. And once again, you can see where it's based on the big moves from Friday's jobs report. You know, if you look at what's going on with the Fed, let's be frank here. Okay, we get a cut or two. How much does that really change? We have a 2-speed economy. We have those who have a need for credit and those who don't. And those who don't most likely have savings. Maybe they're baby boomers. Their income isn't going to suffer much with a cut or two. Is it going to help the housing market dramatically, a cut or two? Especially considering how elastic the relationship is with 10-year yields? I don't think it will. And in terms of financial conditions, when I talk to people and you say financial conditions, what's the first thing they talk about? The stock market. And where are stock market prices? We all know where they're at. I think you'd have a hard time saying financial conditions are too tight. I think a rate cut or two isn't going to make a huge difference. And the issue is inflation. The year-over-year number today is still higher than it was in January. It was 3.1. So ultimately, inflation's coming down, but it isn't going to change the middle class's problem, which is the compounding of inflation over the last handful of years, and those prices aren't going down. And even if they stop here like auto insurance, do you really think it's going to go dramatically lower in the future? I don't. Kelly, back to you.
I know. I don't think many of us are expecting a break. Rick, thank you very much, Rick Santelli. We're moments away from Chair Powell's press conference. We'll take you there live as soon as it happens, about 17 minutes from now. But first, we'll take a quick break with the Dow down slightly and the NASDAQ still up more than 1.5% and near record levels. Don't go anywhere.
DNP. DDC KN 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 LGVN
off.
Welcome back to Power Lunch. The Fed decision is in. They're holding rates steady, and we're less than 15 minutes away from hearing from Fed Chair Powell, which can often be even more market moving. For more reaction, let's get to what investors should do now and to listen for in that. Tim Seymour joins us of Seymour Asset Management. He's a CNBC contributor. Tim, it's great to have you here. Welcome. And where are you? So the decision was hawkish. The market's not sure if they should react that strongly to it. And where are we now?
Yeah, 15 handles down on the S&P off of where we were very bullish coming into this is impressive given the dot plots did not give bulls what they should have wanted. 3 to 1 was more aggressive. The crew so far has analyzed this right on.
LLY, Lilly, FDA grants cell percatinib, traditional approval in thyroid cancer. That from Lilly.
But be dovish.
LLY.
And we'll wait for Fed officials over the next 2 to 3 weeks to try to unwind some of that. But the reality here is that the market is balancing it in real time.
KAVL.
As you pointed out earlier, the Fed is certainly a lagging indicator. The story for the market, though, over the last few days has been the continued outperformance of semiconductors. They've outperformed the S&P by 20% since mid-April. The reemergence of Apple as leadership along with semis, this is a great backdrop for what's working to continue to work. Again, maybe a modest downtick in the economic outlook, but stability and a Fed on hold. This is great for a CapEx cycle in technology. It's great for companies that are growing. And it really does, I think, give the market some reason to continue to love what it's loved since that payroll number, which says the job market's balancing, but it's not falling apart.
So I was going to ask you, how do I trade around this decision? How do I trade around the words here? And I sense your answer from what you just said is do nothing. Sort of stick with what you got if it's working.
Well, there are places where I think you've also reaffirmed some trends that may be picking up some more steam. I think consumer discretionary still has headwinds. I think the consumer, and we have this bifurcation, but I think you're starting to see some low on fumes, even in some of the, call it the higher demographics. I think if you look at some places where you've got sensitivity, I think the housing market and some of those trades, which are stratospheric again today, I've been wrong on this for 6 months. So I just think you have a dynamic here where asset prices there, I think could come under some pressure. But again, some of the discretionary parts of that housing trade, whether it be in home furnishings, et cetera, that have been on fire, I would be cautious. I would be buying weakness in gold. I think gold, which gave up a lot of ground on Friday's payroll number, the dynamics that had you wanting
KAVL, Caval Brands getting a pop here, Kilo Alpha Victor Lima.
A world and certainly a U.S. Where deficit spending is and essentially budget deficits are a thing of the future. And I think you want to buy some of those dynamics. Interesting, in terms of the bond market, and we've had a massive move into this. I think there's a lot of investors, especially in the advisory community, that are looking to see where they can really push out duration on bonds, where they can be buying mid part of the curve, longer end of the curve. And is this the signal we've finally been waiting? You can look at rates all the way back to July of 2020. And in my view, it's a long trend, but it's still higher. But we're right at the bottom of that channel in a place where investors, I think, especially those that are looking to make allocation changes, want to own more duration in the bond market. It hasn't made sense to do it until now.
Yeah, it's been anything but up bonds bull market, as people have called it. And I think your point is
DDC.
interesting to mention, by the way. The more the Fed can ultimately cut, the more it'll help the deficit. You also, Tim, talked quickly about Apple's leadership and being important for the whole market. I mean, this 11% move in 2 days is absolutely breathtaking.
I think it's shocking on some level when you consider that this is a company that wasn't growing earnings for multiple quarters. But if you think about it, it's also a company that, in terms of its leadership, it hadn't done anything since January of 22. It was underperformed the S&P by almost 3% over 615 days. And so this breakout over the last 3 seems extraordinary, except for the fact that you're talking about now the largest market cap company in the world that's going to continue to grow software earnings by 8 to 11, 12% at a 75% margin in a world where they're buying back more stock. They're going to be cash neutral. In other words, they're going to be giving back as much as they can to get to neutrality. And look, what we also saw from mega cap tech over the last few days around Apple's WWDC is that Apple still owns the consumer. And that you have to go through this distribution channel of 2.2 billion, devices out there. And I'm not telling you that
KAVL shares
shares
continuing higher now, up about 50%, continuing to spike here.
Even if the fundamentals around the earnings profile haven't been that extraordinary, there's been a lot of other things going on.
All right, Tim, thanks very much. And we will see you tonight
LGVN.
on Fast Money at 5 o'clock for more reaction to Chair Powell's comments and so forth. Tim, good as always to see you. Thanks for being with us today. And we are just moments away from Chair Powell's press conference. We'll get more reaction to that and to the Fed decision when Power Lunch returns right here. We'll be right back.
AAPU, 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 AAPU.
KAVL halted on a circuit breaker now. Kilo Alpha Victor Lima. KAVL up 67%.
AAPB. AAPB.
Shares of Apple hitting new highs, up about 5.75% today, 219.33. That's AAPL.
Cores.
PARA, Paramount. Global's proposed transaction with Skydance Media is not moving forward. Memo seen by Reuters.
Wind.
Paramount Global says will always remain open to exploring strategic alternatives. That from a memo mentioned by Reuters now. That's Papa Alpha Romeo Alpha.
Welcome back to Power Lunch, everybody. We're just minutes away now from Fed Chair Powell's press conference. It should be very revealing, interesting. Certainly, we often see big market moves based on what investors hear or don't hear from Chair Powell during the Q&A. Meantime, let's bring in our friend Don Peebles. He's the chairman and CEO of Peebles Corporation. You may remember, if you were watching yesterday, he was the only member of our mock Fed panel
DDC.
to vote for a cut in interest rates. Don, welcome back. Good to have you with us. Explain your reasoning once again for those who weren't here with us yesterday, why you thought a cut was appropriate. I thought it was a very interesting point of view, and just basically your reaction to what you sense the Fed has done and said here.
Well, first of all, the reaction is no surprise, but growing disappointment. The reason I think they should have reduced rates is what's happening to the banking system right now. If you look at local and regional banks, they have over 80% of the exposure to commercial real estate loans. Office buildings are in a free fall in major cities around the country, Washington, D.C., New York City, and Chicago, and so on. And so those two things are threatening the banking industry, and you add the interest rates to commercial real estate borrowers has more than doubled in the last 2.5 years. It puts such a strong level of stress on these banks, and it also freezes capital where the banks are not able to make loans that they should make to small businesses and individuals. And of course, they're calling in and pulling back credit on both of those sectors as well.
So I'm hearing you say, if I'm understanding correctly, that there is a big day of reckoning
LGVN.
coming for small and mid-sized banks because of their exposure to commercial real estate, presumably to some commercial real estate companies. I don't know whether you would include your own in there. I hope not. But that there is a day of reckoning coming and that the Fed is missing it, swinging and missing it.
Yes, what I'm saying is that their treatment or their cure is going to kill the patient in some regards because, again, there's a big day of reckoning coming. And in fact, the FDIC issued a report about 2 weeks ago indicating that over 600 banks would be insolvent, local and regional banks.
KAVL.
They had to mark their commercial real estate portfolios down to market. And those properties are not going to recover anytime soon.
KAVL resuming now. Kilo Alpha Victor Lima. KAVL.
KAVL.
Shares continuing to spike here now.
Consumers getting hit hard because the cost of housing.
$2.80, up 85%. Kilo Alpha Victor Lima shares resume trading. $2.85 the high now on Taval brand.
KAVL. KAVL.
$1.8 trillion of COVID relief.
$3 now.
And that
HITI.
money is now run out, and now we're beginning to see things settling down. And frankly, the rate increases were way too extreme and too rapid to begin with.
So, and also we pointed out earlier that the cost of insuring a car, let alone, apart from the cost of buying a car, has risen by 23% over the past year. It's just gotten really difficult. I am sure there are people, and I ask this with affection and respect, who would say, well, of course Don Peoples, a real estate guy, would like to see interest rates lower. Of course Don Peoples, a real estate guy, would point to a looming crisis that originates in commercial real estate and is going to infect the banks with which he may, in fact, do business. How would you answer those folks?
Well, the real estate industry and construction industry is one of the largest employers in most states in the United States. And most urban centers rely heavily on real estate to produce tax revenue, to produce jobs and economic growth and activity, and to provide housing to attract more people to come there. And so the
KAVL hit $3.10 at the high now.
They have a major impact on local and regional banks because they're one of the largest borrowers. And so we have to look at the industry and its impact on the economy. And by the way, again, automobile industry, housing industry, insurance industries, small businesses, everyone's affected by these rapid increases in interest. And yesterday, there was one of the panelists spoke about how high interest rates benefit public employee pension systems. Well, most of them have major exposure to commercial real estate and have seen their investments plummet. So they're hit hard by this too. And so the average worker is going to be affected.
Great point. Don, we're going to hear from the Fed chair in about a minute here. So there are a couple of different things he could choose to do. He could choose to emphasize maybe some of the more recent data, talk about kind of obliquely or directly this morning's CPI number showing that inflation's coming down. Maybe he thinks it'll stay that way. In other words, he could try to shift the emphasis from away from the more hawkish tone of the data prior to that to something, more forward-looking and say, there are signs it's coming down. I think the market would take that obviously as a positive.
Yeah, and I think that's what he should do. And I think it's likely what he'll do is that we have a soft landing. Things are looking good. The economy has slowed down, and unemployment is stabilized as well. And so, now's the time to begin to look forward and begin to see some reduction. And he may touch on the fact that they can see down the tunnel some interest rate reductions.
Although I don't know how exactly, and maybe you could give him the way to message this. How do you message to the public that you're going to cut rates while they still feel like inflation is too high?
Well, I think you have to message it that things are leveling off and we have a soft landing. And so they can look forward and see that things are stabilizing and will review their policies as they go forward. But I think people want to see interest rates go down. The public wants to see interest rates go down.
Don, we have to leave it there. Hope to see you next week at Uncharted. Here is Jay Powell.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
To keep demand in line with supply, recent indicators suggest economic growth is still expanding at a solid pace.
The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high.
Private domestic
We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year
in labor market,
to
it's coming into better
1.3%
balance.
in the first quarter, private domestic final purchases, which excludes inventory
April and May
investment,
jobs
government
pace still
spending, and net
strong.
exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. and we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of
DDC.
Incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month, reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher, 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamaros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
AAPU.
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I don't really, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible, but I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response, which is another thing that could happen. But again, we don't see that. And we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a couple of meetings ago, a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that so that what's in the SEP actually does reflect the data that we got today to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago. And we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year. And as I mentioned earlier in the what did we take away from this? We had really, really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter. And what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. You know, there are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. You know, we're at the economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. You know, how should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now, we can't really know that. That's an interesting dispute and discussion to have now, but ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Stein with Reuters. Just to carry that a little further, should we read this as a conclusion that the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, and another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. In the meantime, we're asking, is our policy stance about right? And I think we think, yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had, above trend potential growth and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that, though. Look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. So that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that. But and of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but
back.
S&P futures 54.44 now, up 60. Powell said readings like today's CPI is a step in the right direction, but one reading is just one reading. Don't want to be motivated by that. It's not our job to tell people how to feel about the economy. Powell said it's not our job to tell people how to feel about the economy.
MODD. Back.
Powell said we are doing everything we can to bring inflation back down under control.
DDC.
We're in the phase of sticking with it until we get it done.
LGVN.
We are encouraged that we are still seeing solid economic growth. Today's inflation report is also encouraging, but comes after several that were not so encouraging. Asked about shelter inflation, says there are big lags in seeing it feed through into inflation data. It may take several years for the bulge in rent prices to work its way through to lower housing inflation.
Prague. 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 APDN. Prague. DDC. Prague. LGVN.
Powell said we do see increasing financial pressures on
Prague.
more lower income people. Best thing we can do is foster a strong jobs economy. Household sector is still in pretty good shape, just as not as good as a year ago.
LGVN. LGVN.
Powell said if we see unemployment more than we forecast, we would view that as unexpected weakening. LGVN Longeveron spiking to the highs now at $1.86. Lima Golf Victor November. Powell said if we saw troubling weakening in the labor market, that is something we would consider responding to. Powell said many things would make, says the decision to loosen policy could have several reasons associated with it. Many things would make it on that list, but declines to give specifics. GME GameStop getting a little pop here now, 29.60. Golf Michael Echo.
MODD.
Powell said we will look at totality of data
Prague.
on labor and economic growth and inflation to begin rate cuts. I'm not at a point of giving dates for rate cuts.
Prague. Prague, DDC, Prague, MCN, Flux, Krone, Prague, Krone, LGVN,
Powell said we are well
TNXP.
aware of the two-sided risks we face.
Prague, Prague,
We understand the risks of waiting too long or moving
Flux,
too quickly.
Prague,
We are trying to manage those risks.
Prague, Prague,
PROK, Pro Kidney, getting a pop here now. Papa Romeo Oscar Kilo on light volume.
BRTX,
Powell says, I think our current approach is the right way to think about it.
BRTX, Prague, Serve,
Powell said we have the ability to right now to approach rate cut question carefully.
Prague, BRTX, BRTX, BRTX,
Powell said our plan is not to wait for things to break and then try to fix it.
back,
BRTX, Roth, MKM reiterating the buy and $15
BMR,
price target.
BRTX,
That's BRTX.
BRTX, BRTX, back, AIHS,
BACK, IMAC getting a pop here on light volume. Bravo Alpha Charlie Kilo.
DDC.
Powell said there is one variable like housing prices moderating that would decide us. There is no one variable, correction on that. No one variable like housing prices moderating that would decide us on a rate cut. Powell's press conference
LGBN.
ends.
AKBA. Prague. Flux. HEPS. Back. BQ.
S&P future is pulling back 54.39.75, up 1%, 55 up 55 now. Moving lower after the end of the FOMC press conference.
Prague. 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 Prague.
PROK, Pro Kidney, more highs now. Papa Romeo Oscar Kilo, up 35%.
DDC. SRTY. Prague. SRTY. SRTY. Prague. 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 PTPI. LGVN. TBIO. SRTY. 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 PTPI. SRTY. 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 PTPI. SRTY. 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 Back. Back. SRTY. SRTY. TCON.
BA Boeing, FAA, and SPR, FAA had to tell Senate panel that agency will continue stepped up oversight of Boeing and Spirit for the foreseeable future. That's from testimony seen by Reuters. That's BA and SPR.
Add. DDC. CANF. PTPI. PTPI. LGVN. PTPI.
Double Line Capital's Gunlack says labor market is weakening, but not alarming yet. Says needs-based part of the economy are getting crushed by high prices. If inflation rate is different depending on your lifestyle, says inflation rate is different depending on your lifestyle. Says labor force is shrinking, and so the labor participation rate is going down. Inflation. That's from Double Line's Gunlack.
MICS. UGW.
Gunlack said if oil prices go down, we would see further relaxation on inflation. Says inflation will come down. Says actually think less confident there will be one rate cut this year.
ORCL. 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 AIHS. DDC. Prague. LGVN. MICS.
Coming up after the close at 4:15 p.m. Eastern Time, earnings from Broadcom, AVGO. Also after the close, PLAY, Dave and Buster's.
DDC. Prague. Prague. LGVN. BQ. XWEL. PCF. AAPD. Flux. DDC, QNCX, BQ, Cocoa, Cocoa,
A double line Gunlock says still expecting a recession. TVGN Bio to join the Russell 3000 Index, Tango Victor Golf November.
LGVN, LGVN, Crone, TBIO, TBIO,
Double Lines Gunlock says it's worth dollar cost averaging into gold at this level.
CRC, BMR, Where? CRC,
Hearing Betaville says Whirlpool
BTDR,
has come under the spotlight amid takeover talk. Shares of Whirlpool at the highs, WHR 95.54. That's Whiskey Hotel Romeo on volume.
AIHS, CRC, DDC. Eden. EPM. CRC. GNTX. LGVN. TBIO.